for the past week, the market's been dropping. What are you seeing?
Yeah, it's not just dropping a little bit. It's dropping multiple percentage points across the board. The Dow Jones, the Nasdaq, the S&P. You and I were talking about it here earlier today. We're on the cusp and on the verge of potentially wiping out, I think, the gains that were acquired all of 24. So we're getting to that point where we're seeing some of this stuff get wiped out. Now, is this something that's going to be maintained and then kind of hit a recession mark, and we're going to have this correction in the marketplace? Some of this is being done, based on some things that are happening right now with tariffs and things like that, because there's a correction and a response by the markets based on that decision. It doesn't mean that that is the long-term result of that decision. The markets usually respond as soon as something happens like that in a negative way. They don't care that there could be a possibility this could work. And I'm not saying it's right or wrong. I'm just saying that the correction might be correct in terms of that the markets have been inflated. That has definitely been the case for some time. This reaction to the markets based on what's going on doesn't mean it's going to be maintained for a long period of time. This could auto correct again. But what things you and I have talked about many times and have put out there is the time aspect. The people talk about having time to recover, but we say this all the time. You don't get the time back. So this is where we kind of fall into this. We've used this term before, Will, the sequence of risk return, those that are in retirement or those who are about to be in retirement or those that are utilizing some sort of asset to pay for some large expense, such as a wedding for a child or maybe college tuition that they're having to come up with. And when I say sequence of risk return, what that means is you're spending money from that asset, utilizing money from that asset, and then simultaneously losing inside that asset because of the result of what's transpiring with the market, if it's tied to that. So it's like a double-edged sword. You're spending and losing simultaneously. So that loss gets just blown out of proportion because you're taking money at the same time. This is a dangerous proposition and one that you hope you don't fall into. But it does happen, not every day, but it happens every couple of years. There's always corrections that happen with the markets. There's never always positive and there's never always negative. But when that negative happens and you're spending money on something big, whether it's distributions for retirement or what I just described with maybe tuition or a wedding where those expenses are big, that has a big effect financially on an individual or a household. And those are things that we talk about with people all the time is that you got to look at the bigger picture. We tend to fall in, Will, you and I've talked about this many times. We fall into kind of a tunnel where we get tunnel vision, where we don't see outside of what we're doing at that particular moment, meaning, okay, I need the money for retirement, or I need the money for a wedding, or I need whatever it is. We live in that moment. We're very microwave society, right? In terms of right then, right now. We don't tend to look at something on a bigger scale. And what I mean by that is kind of see what is actually taking place outside of what's currently existing. Meaning, can we see negativity? Can we plan for negativity? And the answer is yes. And I don't think enough of us kind of look at things that way and making sure, hey, if A happens, are we protected? If B happens, or if C happens, doesn't mean it's always going to transpire, but we better be prepared because it has happened in the past. That's the point. It doesn't mean it's always going to occur again, but there's a phrase, history is doomed to repeat itself. And that goes for money. So we have to be able to protect ourselves from downside risk, but also protect ourselves from the time loss. We say time, we can recover we have time to recover situations, but I always argue we never get the time back. So when you lose and have to recapture, you don't get that period of time back for growth. So these are things that people have to kind of talk about and try to foresee and plan against. We don't want to plan for negativity, but you have to do it. You have to do it. It's not something we want to do. It's like you don't want to plan about when you pass. It could happen tomorrow. So it's not something we want to talk about, but boy, you better be prepared for the unknown.